Hi there, I'm here with Fabiola. Hi, Fabiola.
Hey, Anaie, how are you?
Good, how are you?
Very good. I'm so happy to be talking to you, and I'm glad that we can do this again and spread some knowledge around
Yes, sharing some coffee during our
and
social.
sharing some coffee.
Well, for those who don't know Fabiola, she was my broker when, we've worked together twice. We worked together at Piquet Realty and at Dweck Realty afterwards, and now she is the principal broker for CTC Financial.
Yes.
And she's here to share some knowledge and to give us some good advice at this time when everything seems so different, trying to make sense of the mortgage world in a world that nothing else makes sense right now.
Or
uh,
try to, right?
oh yeah, that's what we're trying to do. Things are changing so fast that what
That's right.
what we speak today might not be true tomorrow. So it's always good to check the facts and speak with a professional who can give you the up-to-date advice. And that's why we're here with Fabiola today.
Thank you. Thank you for having me. I know that we've talked a few times about this, and we've worked together in a few clients in the past. I'm just glad to be here and to be able to shine some light on the subject. See how we can help some folks out.
That's good. So Fabiola, can you give us a little recap of how the market has been since the beginning of the pandemic of the COVID-19?
Yeah, so let's go a little back, right? Beginning of March, when all of this really took place and it was being highlighted everywhere. So in the beginning of March, the Federal Reserve made an emergency interest rate cut, slashing the benchmark US interest rate by half of a percentage point. That um, was the biggest cut since the financial crisis. And that was a sign that the global central banks are prepared to act um, and to contain the economic fallout from the coronavirus, right? The US central bank has not made an emergency move like that since 2008. Fed leaders voted anonymously in favor of the rates reduction to help stabilize the economy and the financial markets as the coronavirus spreads. Needless to say, this is a highly unusual move, but it comes from the heels of other central banks around the world that were lowering their interest rates. And obviously a call from President Trump for the big Fed rate cut, right? Yeah, I'm sure that you remember that. So in the beginning of March, we're looking at interest rates that were lower than 3.5%. That's a big deal, right?
Mm-hmm.
Fast forward a few weeks, and now we are in mid-March, and the Fed had cut the federal funds rate to almost zero. Do you remember? It was a big deal, big deal. And the rates went back to normal because the banks were anticipating this. And also the government bought $2 billion worth of mortgage bonds. Now it's important to understand and not confuse the short-term Fed fund rates with the mortgage interest rate. Two completely different things, right? They are not directly correlated. The mortgage rates are driven by the MBS market, the mortgage-backed security market. So what we know is, yes, the Federal Reserve cut interest rates to near zero, and this affects the interest rates that the bank used to lend money to each other, right? Which in turn lowers the short-term interest rates. So think about your auto loans, your credit card loans, your business loans. Those are short terms, right? And you could see that happening. It also increases the rates on savings accounts and CDs. We also know that the mortgage interest rates did not go to nearly zero, but they are still historically low. So if you are going to compare, beginning mid-March to mid-March of 2 years ago, we're talking, it's still much, much lower than the previous years. Fast forward a little bit more, today what we see is that the market is still adjusting to current circumstances, right? We see that every single day, the guidelines are changing. Programs that were available have been put in temporary holds, so we're not able to provide those to our clients at this time, right? The banks are a little more strict. So now we're watching them adjust to the current situation.
That information. And if you could give us an advice in regard to mortgage loans right now, what would it be?
So I think it's important to understand where you are in the process, right? And by that, I mean, if you're currently in the process of buying a home or you're thinking about refinancing, I would make sure to speak to your loan originator. That's what they're there for, to give you all the information that you need, right? To make sure that it's worth it for you at this time, to make sure that you qualify, to make sure that you have the necessary documents. Knowledge is power, right? We know that. So the more you know of where you stand, the more you know, and the better prepared you can be. So reach out, talk to your loan originator, ask the questions, know everything that you can in order to be prepared and figure out a plan that is suitable for you. I highly recommend that.
Good advice.
Yeah.
Some clients ask me when they are getting a mortgage loan, if they should choose a 20-year term or 30-year on their mortgage. And my advice to them is that as long as there is no prepayment penalties, to go for a lower payment. In other words, choose a longer loan. And of course, if they have, how do you say it? There's a word for that I always forget. If they can trust that they're going to make a higher payment every month, then choose a longer term, but still make a higher payments every month. That will decrease the amount of the principal that they pay in the end. They're faster, and at the same time they don't have a higher liability each month. So for times like we're living now, where there's so much uncertainty, some people are losing their jobs. Some people don't know if they can make that monthly payment now. That would be that could be actually a good plan to not have such high liabilities and be safe in the end. What is your recommendation in regards to that?
I like to educate my clients on the difference between one and the other, and make a decision based on what suits them better and what their goals are, right? So that's super important. We know that the shorter the time, the term of the loan, the less interest you're paying.
Yes.
Period, right? But we also know that the longer the term, the less your monthly payment, right? So what I usually recommend is to combine them, right? Is to try to make that extra monthly payment every year. So instead of 12 monthly payments, one each month, you make a 13 full monthly payments every year. That extra month can knock out 8 years off a 30-year mortgage, depending on what your interest rate is, right? So you're doing both at the same time. You're shortening the length of the loan, and you continue to pay a decreased monthly payment, right? So you're playing with the numbers. You're making it work for you.
It makes so much sense. And how has, in the midst of all that's going on, how has your days changed?
Besides having a kid with me all day, full time, right? Homeschooling and all that. My team and I have noticed an increase of clients calling us and not knowing what to do. They're very uncertain. They don't know if refinancing is right for them. They don't know if they should be purchasing, or if they're in the middle of a purchase. They don't know. Are you still there?
I am. You left.
Okay, my phone, it gave me an error thing here. So we've noticed a lot of uncertainty, right? And the truth is, there is no one good answer. There is not one standard answer that works for everybody. We have to literally take this case by case. We sit down with the client, we analyze their files, we run numbers to see if it makes sense to move forward or wait a little bit. We take their goals into consideration, right? So we want to make sure that the decision that we guide them towards, it works for them, and it works accordingly to their goals also, and to make sure that they're comfortable with the process. So
a customer-centric approach, basically.
Yeah, you have to, right? Especially you always have to take this approach, period. But at times of uncertainty, you want to make sure that the client is comfortable, right? You want to make sure that they feel that they are taken care of, because the world is as it is. It's uncertain all over the place. So the little bit of certainty that you can give them, it makes you can breathe easier, right? You know that you're making a smart decision on the loan process, or if you should or should not refinance. So that's what we are trying to do, is guide them towards a decision that is based on numbers, that's based on knowledge, that is based on their scenario alone. And that's the best we can do, right?
That's what we can do. I don't want to take so much more of your time. I just want to thank you so much for being here.
Thank you. I'm so happy we got to do this.
Yes, me too. I will share. Would you like to share your contact information now, or?
Yeah. So I'm sure you're gonna put it down there on your description. But for those that want to reach us, we are at ctcfinancial.com. My name is Fabiola Lima, and you can reach me, and you can reach my team, and we're here to help.
Okay, Fabiola, thank you so much.
Thank you, Anaie. We'll do this soon again. Have a good one.
You too. Bye-bye.